What up, my people? Welcome back to today's edition. Sam Ainde here, the director analyst of Life Pips. In today's video, I'm going to be talking about forex, and I'm going to be explaining in details how you can start up as a forex trader, as a beginner or as an intermediate or as an amateur, how you can begin to make money daily and of course weekly. What you need to know about forex trading and everything. And most importantly, I need to tell you the difference, because someone once said something and it's quite important to clear the difference, that forex is just a sporty bet that wear suit. If you believe that, please come down in the comment section. Drop your comments and your idea, your views in the comment section. Let me know. Do you also believe that what forex is sporty bet that wear suits and tie? Anyway, we're gonna be talking into that and explaining how you can start up as a forex trader. Get away. Let's get out of it right away. Thank you so much. All right, welcome back. So let's go into today's class and let's dive into it. So what is forex and what do you understand by forex? Forex is an exchange of currencies. You want this currency, the other person wants this currency. Just for example, let's go into ages. Why forex come into place? We know forex has been in existence for more than decades. That's why I tell people that forex can never go out of business or out of anything, for the fact that the countries are still in existence. Countries are still exchanging one thing or the other for themselves. Countries are still importing and exporting. Forex will keep existing, for the fact that people are still traveling from one country to another. Forex will still will keep existing. So it's all about exchanging of currencies, one currency to the other, changing of one currency to the other, and then you as a trader, you are predicting that this currency will be higher than this will be higher than this. What do I mean? Very good. Now, for example, you will believe that the past predict the future. Forex has been existing for over decades of years, millions and thousands of years. So as a forex trader, you are predicting that what happened in the past, because there is a saying that says that the past has a tendency of repeating itself. So that there is a repetition of what happens in the market that tends to repeat itself. If something, for example, I don't know if you have once been a kind of person that you just see, oh, it's like I've seen this thing before. No, has it happened to you before? You're like, oh, this thing is as if I've seen before. Something we are calling to you again and again. I see, you're like, is it that I saw it in my dream or where? You get, or a place or someone, someone like that. And so such things are what we use as a prediction. We use to make our decisions in the market, and there is a market for it. There is a market for how you can trade, how you can buy currencies. You have to have money to buy the currencies. Once you can predict that this currency will go higher than this, and it goes fine, you make money. It's that simple. You buy and say, what is a fantastic thing about forex trading is what? Once you buy, you are making money, and when you're selling, you're making money. How? What do I mean? Very good. Thank you. But come on, Dr. Sam, what do you mean by that? If I buy, I'm just making money. I'm selling. Yes, that's why it is a fantastic business. You know, if you are buying, you are making, if you're selling, you're making money as well. What do I mean? Because if you're buying, you must have been buying at a lower price. Then you are buying it, but then you are buying, someone else is selling. So you are buying at a lower price. You are buying at a lower price so you can make profit when it's higher. You are buying to hold for it to go higher. You are selling when it's higher. You are selling when it is high, and you're predicting that it will come down, that the value will drop. Do you understand? However, we'll still be going into practical, where I'll be showing us everything I said here. But I want to explain everything theoretical to you first, as the introductory part, so that we can all get that clear. Okay, so forex has been existing for ages. Forex is about buying of currencies, of two currencies, one or the other. Forex is about prediction of the past being occurring again in the future. That is established. Who are those that trade forex? Forex before has been in existence, and these are banks, institutions that trade forex. as the early start of this currencies and all like that, it wasn't available for individuals, retails, and the likes like that. It used to be for people with calibers of people with billions of dollars, banks, institutions, and the like that. So as digital technology, everything begin to develop and everything come into place, we have the access, we have the accessibility and the avenue for retail, like to bring in our $100, to bring in our $1,000, $2,000 into the market and have the leverage to be able to trade and make money back to yourself. So that has been in existence for a couple of years now. So that's why everybody can now trade forex and make money as you like. It's cool, it's fantastic, it's sweet, it's amazing. So that is for that. So for you to do that, you must have what we call a broker. What are brokers? Brokers are those who license you into the market. You don't have the money, you don't have everything it takes, because even though I used to tell my students, even though you are bringing $1 million, you are still a retail trader. Yes, of course, you are still what? A retail trader, except you are bringing in billions of dollars. Am I talking somebody? So that is exactly what you need to know, that as the level you are, because of the volume of forex is about $7 trillion traded daily. $7 trillion traded daily. So that's the volume. So as a retail trader, you are just any amount you're bringing into the market is assumed and presumed to be a retail, except is in a large volume of such. So that's for that. And also I need to establish currencies. There are different currencies, and when do you trade this forex? I'll tell you. Okay, let me talk about when do we take the forex. Okay, if I talk about the currencies, but when do you trade forex? There are times that you can trade this forex and trade the market. You just every time. It's not just your market day. Oh, market day today. Let's go. You just edit to your must have time. The world is into, is it not 6 planets, 6 continents or 5 continents? We have Asian, we have American, we have Europe, we have Africans. What else again? I mean, what else again? You just go in the studio. What else again? As if we have to like 6 continents now. Can you remind me? What else again? Okay, actually, you guys are in the studio. Can I even remind me? Can you imagine? Fuck. Okay. Anyway, the market majors on just what? On just four continents: Asian, Europe, American, and then Africa is not even there. Sorry, African countries are perceived to be underdeveloped. So that is why you can never see any currencies, African countries currencies in the global market. You can never see them. Even if you are in Nigeria, Ghana, Cameroon, Kenya, whichever, you will never and can never. I don't know. I wouldn't say you will in the future. I wouldn't want to say that. Because something can change the future. African can enter a spiral developmental, crazy one, and then get themselves involved. Do you understand? But as I speak now, and right now, there's nothing like that. So you always see developed countries currencies on the market. We'll show you everything. Don't worry. You see it on the platform. We'll show you the platform. I'll show you the platform. It's called MT5. The platform we use to analyze is called Trading View. I'll show you everything. Okay. This is just a theoretical part. Then by the time we go into the practical, you will be able to understand everything I have explained. Okay, good. So the moment Asian's market opens around 1 a.m. By the time Nigeria 1 a.m. I mean by GMT +1, that's the Nigeria time. 1 a.m. in the midnight, that's when the Asians open. While New York opens around 6 a.m. in the morning, that's GMT +1 as well. West African time, that is GMT +1. So you can convert that into your own time, okay? London open, that is New York. London over, I say New York. London, that is London. That is Europe. London mostly opens around 6 a.m. Asian, don't forget Asian are Tokyo's, JPY and the likes. We'll show you this ones. Asians, they are Japan, Korean. They use a currency that is called yen. Japanese yen, JPY. They use a currency that's called yen. So they open around 1 a.m. GMT +1. While London open around 6 a.m. GMT +1. Australian, that is Australian, open around 11 p.m. 11 p.m. That is around 11 p.m. GMT plus 1. While New York open around 1 p.m. 1 p.m. 1 p.m. 12, 2 p.m. That's what New York. And mostly you should know that most of the volume that moves the market mostly is called, there are two sections of the market. Those are the times, you know, that you can always trade. That you can always trade, sectional trading that you can always, by the time you go into the market, you begin to analyze, you understand all this better. Just note those theoretical as an head knowledge for now. We'll go into them into details later on, okay? So there are some there are some key trading section that every traders look out for to trade. You don't just trade anyhow. You know, there are some, mostly times people trade London and New York because of what? Because of the volatility, the volume of money that is flowing at that moment, at that time, you know. Institutions, marketers, and all like that, they're coming together, you know. That time you have volumes to trade, you have a lot of stuffs happening at that moment, unlike other sectional time that are not some volume. So most time people trade on London and New York. It's one of the strongest, assumed to be the, and they believe to be the what, strongest and volatile momentum that people and traders, the institutions look out for to trade. So that's for that. Also, this same thing, because I told you earlier that you need to know how to predict the future. The past can predict the future. Now, in that we have what? We have three types of analysis. Don't be confused. We will show you everything. It's not hard. It's not difficult. Just stay calm and stay to, okay? There are three types of analysis that you can use to predict. These are the things that you can learn by heart. I tell people that analysis is the simplest thing ever in the forex market. But most newbies, no beginners, seems to be, this is the thing that's very difficult. Once I can know how to analyze, I'll be fine. I'll be good, my dear, my brother. You will not be good. Stop deceiving yourself. You are just starting up. You are just starting up. I must tell you that you're just starting up. Because I believe analysis is just the least ever. If you got that clear, if you got to analyze well, fantastic, and everything you can do, you know that just the least. You know, you have to master risk management, have a perfect risk management structure, have a balanced psychology, have a discipline, cut in your greed, you know, become a new mindset entirely. These are for advanced traders. Don't worry, we'll talk about that later. So those are for that anyway. So there are three types at which you can use to analyze this stuff. We have, number one, we have sentimental. Number two, we have fundamental. And number three, we have technical analysis. Most traders in the world use one as is mostly common. It's called what? Technical analysis. Because it has believed to be the strongest and the perfect ways to approach the market, to analyze the market, predict fine, predict well, and be able to give accurate from the past, what has occurred in the past, and give it accuracy for the future to come into place. Okay, so that's for that. Let me explain about sentimental. Sentimental is just about people, by their sentiment, by their perception, by their digression. I just saying, dollar will be greater than euro by next week Monday. Euro will be greater than dollar by next week Friday. For example, dollar will be lower, gold will rise. Oh, gold will be weak, dollar will be rise, dollar will rise up. You know, people are just giving their own sentimental view. They're giving their own sentiment, you know, they're giving their own views, opinion, based on their economic expertise or whichever, you know. Probably they put it online or social media or anything, and then you saw it and you were like, oh, okay. It's just a sentimental view, an opinion. You can't just use that. People sometimes use that, but it's not strong. So that's why I mention it according to their strength. So it's not as strong as what we believe as TA, which is what technical analysis. Okay. So that is for that. So the second one is called fundamental. That one is quite crucial. That I tell my students that it moved the market, but it doesn't still control technical, but it's moved the market in a form of momentum. Fundamental is all about economic indices. that comes out as a result of unemployment rates. It could be NFP. It could be result of, okay, this company is not doing well now, their employment rate is doing well, their GDP is fine, their DCD is, you get. So those are economic indicators, economic of each country is being released. We'll show you everything, don't worry guys, I'll show you everything. Economic indicators being released about these countries or the other, about each country, this one, Asian, this one. So each countries have their own date and set time of their economic being released, and to tell you, to tell traders, to inform traders, to inform experts, to inform analysts about what their currency is all about, so they can use that to predict and say, oh, for say that, oh, now that US dollar is strong, I can vividly predict that what US will be buying. Am I talking? Since it's strong, we'll be buying. They'll be stronger than gold. You'll be buying. Then I'm ready to buy this. I'm ready to do this. You get. So that's exactly. Oh, US is weak now. Let me buy this. US is weak. Let me buy. Let me sell this. So that's exactly what that fundamental does. We'll show you everything in the political section, so you'll be able to understand. But finally get this understood and know that this is what it's all about. Why the third one is technical. This is where we are, where people must have been waiting for. Technical analysis is a fantastic one. It's the one I love. As a matter of fact, I do both actually. I combine technical and fundamental because I know for sure that technical is still the core is still the core key to the market. But as far as the core major key to the market, fundamental also move, because fundamental can I tell people that fundamental is a form of analysis that moves as at a motion, but does not dictate the overall of the market. Just the kind of person that comes as, for example, now you are going somewhere and wind just started. If the wind starts, will you still be inside the wind? And you are not with umbrella, you will do what? You have to run inside the shade. Am I correct? For just what? Because of the rain, right? And once you want immediately stop, what will you do? You come out and what? Continue your journey. That's what fundamental does. It comes what? To bring turbulence to the market, momentum to the market. And once it stops, technical overtakes and take control over, and take control again and continue to move. That's the best way I can explain fundamental for you. Don't worry guys, you understand much more better by the time we move into the practical session. Okay, so that is for that. That's for TA. So TA is one of the fantastic one, and the one I use, I combine both of them together, and it's one of the things most traders globally uses, and of course and many others like that, retail traders like that. So aside from that, let's talk about currency. We have euro, which is in short form AUD. We have dollar currency, which is USD. We have Japan, China, and the last currency, which is JPY. We have Britain currency, which is called GDP. We have Euro countries, We have Australian country, which is called AUD. We have Canadian currency, which is called CAD, and the likes like that. Now I told you earlier that you will never see African currency there. I'm sorry to say. I'm sorry to say. But I wish maybe in the future they would definitely be enlisted by the time they get developed. So the Africans are seen as underdeveloped and developing countries. So okay. So when you talk about forex global market, you're talking about developed countries that you can, if they enlist Africans currency there, you can easily predict it. There's nothing there. You guys are not developed. They are developing country for many years. They easily predict, they are predicting that it will never guys beyond this. So you get on the border like those developed countries, something so you get. So that is why, for me, I'm still baffled why African countries are not enlisted in the global market. I'm still baffled, but that's for that. That's for that anyway. This is what it is, man. It's what it is, guys. It's what it is. I don't know. So that's for that. So I hope that it happens one day in the future. So that's for that. So whenever risk currency, for example, let me say GDP is strong and then dollar is weak. GDP, you always look at the first. I will explain that in the particular. Don't worry. The first currency to determine it, to predict your movement of the market. This first one is stronger. That means the first one will move the second to buy. Once the second is stronger, it will move the first one to sell. I repeat myself. I will show you practical. Don't worry, guys. Whenever the first pair, I told you about currencies, is strong. The currency of GDP will move, will push it to buy instead of that. It's always slash GBP slash USD, GBP slash Euro. It's always slash different currencies like that. So whenever the first pair is called what's it called? The first pair is called is the main pair actually. What's it called? I forgot the name. Is it main or it's the main pair? So whenever it's strong, it buys. Whenever it's weak, it's the one that uses to determine. Whenever it's weak, to sell. So that's for that. What other things? Hey, I want to explain lastly difference between forex trading and sporty bets. Fantastic! You're amazing to hear this. Come on. I really want to have your opinion. I want to have a view. I want to have your take on this. Can you comment? Let me know, please. Enlighten me as well. I want to know, is there difference? Is there difference between, okay, I should even leave this open. Is there difference, please, between forex trading and sporty bets? Please comment on the comment section and let's see how it goes. I want to have your opinion. I want to learn from you guys as well, please. What's the difference between forex trading and sporty bets? If you don't know about sporty bet is, of course, sport betting. You know about all this sport betting, of course, where you can predict this one will win, Arsenal will win, Chelsea will win, Barca will carry this. You get. So what's the difference? Is there any difference? If there are difference, please put it on the comment section. Let me listen to you and let's see. Maybe next video, I will come up from your this thing and we'll brainstorm together and see if it's actually the same or they are different or not. Thank you so much, guys, for listening. Thank you for your moment, and I hope you learned something today. Join me in the next series of forex trading and how you can learn forex with ease. Don't forget, very important, guys. Wait. Do not forget to subscribe. Turn on the notification bell and like this video because so other people can watch. I don't know if you get any value today. Thank you so much. I remain Sam Ayinde. Thank you so much and have a wonderful day. Cheers, guys. Cheers.